Hi there, welcome to Kneppy Invest and welcome to April 7, 2025. Hope you all survived. We've only got about 40 minutes left of trading today. Interesting enough, market index says we're still in the pre-open, but I do know, because I was paying a little bit more attention today than I usually do, market index and Commsec were both down at the same time at one point today, and I did see a little message from market index in regards to unprecedented traffic today. And that's probably why Commsec was down, probably why Stake was down. I've heard that as well. And probably maybe a lot of other platforms were down too. So interesting day in the market. As expected, we are down a fair bit. Best case scenario I thought was down 1%. And that is if we saw the American futures rally. Worst case scenario was down about 5%. And in fact, on open, we were down 6%. So we have seen the market, we have seen a little bit of buying coming in today. And in fact, I have looked at the XJO 1 minute chart in Commsec, and we did see a rally about 5 minutes ago, like a 3 to 4 minute rally. And we saw the XJO go from being down 4.3% to being only down 3.5% in that few minutes of trading. And that is what you do, that sort of volatility is what you do see on these types of days. Okay, so the agenda of today's video, we'll have a look at some interesting articles maybe. I'll briefly discuss articles and a site, have a look at the 1 minute XGO chart via Commsec, and then we'll have a look at the ASX today, maybe briefly look at the American futures as well, have a look at the ASX today, the best and worst performing sectors, indices and also companies, and then we'll have a look at the top 5 stocks of the day, not really numbered. I've just put them in some random order. Some interesting companies there, including a company who released their Appendix 4C today after trading had begun. So I did have a look at it just before I started recording, and the company was or is operating cash flow positive for the quarter, and they do mention it straight away in their commentary. Another company is delisting, yet the share price of this company is up about 60%. They've done something a little bit different in their delisting announcement. They mentioned the company is significantly undervalued, as they always do, but they did something a little bit different than other companies. So I'll talk about that company as well. Small company with 2 animals in their name. See if you can name that company. And then I might have a look at 1 or 2 of your comments. Okay, so first thing, what shall I do? Look, it says ASX open. It's closing in 6 hours. Oh, it's going to be closing, since the time is 3:30. It's going to be closing at 9:30 p.m. So I think Market Index or the technicians at Market Index are still working on their platform, because the market is definitely not closing in 6 hours. Let's go. Yeah, let's have a look at the 1 minute chart first. So I'm not going to have a look at the 1 minute chart via TradingView because that's 20 minutes behind. But I will show you something really interesting. What I've done in TradingView is I've overlaid the American futures on top of the XGO just to see if there's any sort of correlation. But this is the Commsec 1 minute chart for the XGO. Now, this goes back to the start of the day. You can see a massive drop. In fact, the low of the day was just before 11 a.m. And then we saw a really good rally between 11 a.m. and midday, and that rally stalled out. But after then, we have seen a few times when we have seen a little bit of buying coming in. So this is what we usually do see. And the last time happened within the last 10 or so minutes. In fact, yeah, the XGO went from being down about 4.38% to being only down about 3.5% or 3.48%. And I just want to see if that rally's lasting. No, it hasn't. We're still seeing a little bit of volatility. But this is the sort of volatility you will see on these sort of days. Highly volatile. And I would say day traders are loving this sort of day. Absolutely loving it. So who knows, in the next 40 minutes of trading, the XGO might only be down like 2%. And that would be considered a good day, relatively speaking. It could also be down 5%. Excuse me. It could also be down 5%. I am paying a little bit close attention to the futures. NASDAQ futures is still down about 3.91%. Dow futures down 2.41%. So it does look like we're going to see another negative day, start of the day on Wall Street, but I wouldn't be surprised to see a nice intraday rally there. So don't be surprised if that happened. And that could translate to a really good day for the ASX tomorrow, because some of the best days on the markets happen during bear markets, and we're very close to a bear market right now. A couple of articles that I was going to touch upon, but I might leave to another video. One from the Inquirer's Multiple in regards to Nvidia, or doing a DCF on Nvidia. We'll discuss this one because it's just how they calculated the free cash flow for Nvidia over the next 5 years. I think they are really underestimating the potential, and this is something I've seen before. When people try to do DCFs on quickly growing companies, they completely underestimate the growth, and that is doing themselves and even their followers a disservice. I saw this 2 or 3 years ago with Nvidia, and that person who did that DCF was out within 1 year. Not out within 1 year, their free cash flow forecast for Nvidia in 2032 was 10 years out. 10 years out. Yes, they actually reached his expected free cash flow within 1 year. His expected Nvidia's free cash flow in 2032, they reached that 10 years prior, if that makes sense. Yeah, so that's the problem doing DCFs for quickly growing companies. And I'll never do one for Nvidia because you're going to be wrong. And then you're going to have you could do a range of DCFs. I suppose you could do that, but they haven't done that for this. So I might show you this in tomorrow's video if tomorrow is quiet. Another one I wanted to show you was actually an article from Fincher. Which Magnificent 7 stocks is the cheapest? And this could actually be a nice little standalone video, I think. An article reaction video. And then I've always been talking about showing you this, and then I show you it. The Economic Policy Uncertainty Index. It's the highest it's ever been. Global one, even higher than COVID-19. It just shows you the amount of uncertainty out there right now. Okay, so and I'm just going to keep going to, I think this update's on its own, yeah. And I'm always going to have a look at this XJO 1 minute just to see, yeah, okay. Okay, what can you say about today? Although, according to Market Index, we've got another 6 hours of trading. Maybe this is a start of the ASX being open 11 hours a day. Maybe today it has changed. Maybe more trading. Not sure they would like that, the experts. But anyway, I've already shown you what's happened during the day with the XJO, and it looks like the tech and XAO have followed that sort of little bit of a bounce between 11 and 12, and since then just going sideways. And look at the sectors. What can you say about the sectors? I suppose telecommunications, Telstra's probably a defensive stock. In fact, I'm going to keep that open, and I'll go to a new one. And I would assume Telstra is only down 1%, or not even that. So definitely there are people moving towards these defensive companies. Telstra down 0.46%. Woolworths probably down 1% maybe. Yep. Coles probably the same. Although I would consider Coles to be a little bit overvalued. So I definitely can see that selling off. Transurban, would be surprised if this one's up. And APA Group, one I am trading, wouldn't be surprised if this is up, but it's not. So I'm trying to find one company that is up that could be considered defensive. What about CSL? No. What about Cochlear? I'm just looking for one. And what about ResMed? No, everything's down a little bit. It's a hard day to be up. What about CGF, Challenger? I'm giving this away. It's up. Yeah, I'm giving that away. It's in my top 5 stocks of the day. So everything's down. And I suppose it all depends on your, what's the word? Whether you're a pessimist or an optimist, how you view life. It could have been worse. It could have been worse because at the start of the day, we were down by 6%. Now we're only down by 4%. So relatively speaking, it's particularly if you bought some shares on open, you've had a good day. Banks have had the worst day. Not a surprise. So this is telling me that finally people are realizing, or the investors, the market is realizing that if we do go into recession, and that is the fear, if we do go into recession, the banks are going to be punished. They are going to be really bad performance, not the sort of companies you want to be owning. And so banks have had a really bad day, and the ASX 20 is actually down by 4%. So it's actually performed worse than the All Ords and the XJO, and that's probably because of the banks. So let's have a look at the SJO. Is there a company up? Let's have a look. Let's just rub our hands, hoping one company is up. Just one. And we have one. What company could that be? So Telstra, Woolworths, BHP was down a fair bit. I have no idea. Which company in the ASX 20 is up today. Transurban, oh, there you go. Oh, okay, so Transurban must have rallied a little bit from when I opened up. I would have expected that sort of company to be up today. Other companies, Macquarie Group, down big last week, so no surprise there. REA Group, not as down as much as I thought. I thought that would have been like down 4 to 5%. And the worst performing companies today, QBE Insurance, VHP, Fortescue, CBA, and no shock there. So some companies might be considered overvalued. Surprised about QBE. That's a little bit surprising. Yeah, because I didn't think QBE or insurance companies and bad economic times, there would be much of a correlation. I don't know. So that's a little bit surprising. QBE's been the worst performer. By the way, I'm trading that, so that could be a sell, maybe. Okay, now on to the worst and best performing companies. Just having a look at some of these articles in Livewire. They're a little bit late. They're talking about Thursday's sell-off. Let's have a look at the best and worst performing companies. Who wants to guess at the top gainers today? Well, apart from one company in particular, and that company is in my top 5, I would say the best performing companies or the best performing stocks, whatever you want to call them, will be bear stocks. So polar bear stocks and sun bear stocks. So we're talking BBUS, BBOS, and there's a few other ones out there as well. They're among the top. And there's Birddog Technology up 51.61%. I'll talk about that a little bit more when we talk about the top 5 stocks of the day. Cavalier Resources and Australian Bond Exchange Holdings both up, but fairly low turnover. I think we can move on. And then we get to the shorting stocks or the bear stocks. So ultra short NASDAQ up 19.9%. Abacus Storage King, there's a takeover bid for that company, so we can ignore that one. And the BBUS is up 16.76%. And then we get to some small companies. Oh, the beta shares strong US dollar complex ETF. Yank. Why is that up a lot? I'm pretty sure the Trump administration wants the US dollar to weaken significantly. So that's interesting. Okay, so that's by gainers, top companies by or stocks by gainers, by market cap. WiseTech up 1.78%. I would not have guessed that. Car Group. So we've got some tech companies here. I would say these companies are running a little bit because they have dropped a fair bit, and we're starting to see a little bit of buying coming in. So let's have a little chart for WiseTech. Actually, no, not yet. Oh, yeah, that's right. Not yet. We'll have a look at those charts in a second. So what I'm going to do now is have a look at the XGO and just compare it to the, the NASDAQ futures. I just wanted to see if there's a bit of a correlation. And there is. We are seeing a bit of a correlation. So remember that rally at about 11 a.m.? And the NASDAQ futures rallied perfectly in sync. And then we saw the NASDAQ futures go down, and the XGO didn't go down as much. So not perfectly correlated there. But then on that rally, we also saw the NASDAQ rally. So I remember about 20 minutes ago when I started recording, or just before I started recording, there was a rally, and we saw that rally in the XGO. Yeah, so we are seeing a bit of a correlation between the two. And I expected this. I fully expected that our market is finally attuned to the American futures. We want to know, or the savvy investors want to know, what's going to happen on Wall Street tonight. I think that can be a mistake because these futures don't guarantee anything. They could be down 4% and NASDAQ could be up 5%, or it could be the other way around. But this does show you how important American futures are, that we do move in line with those futures, particularly maybe the NASDAQ and the Dow Jones. So anyway, hopefully this is nice little proof for you. So let's have a look at the US futures. Oh, NASDAQ's down to 4.33%. It's crashed. And I think we're going to see the XGO. Let's just refresh this, down by more than 4%. Yeah. There we go. So I first saw this in COVID-19. On a few occasions, I was wondering why the XGO or the ASX was rallying, and then I noticed it was aligned with the American futures, and that's understandable. So, the whole adage, the way they go, Wall Street goes overnight, we follow, and this was the complete opposite, sort of. The way we went The Americans went, but it was all based off the American futures, not based, they weren't going higher because of us, if that makes sense. We were going higher because of their futures. So we were anticipating what they were going to do overnight, but that can be fraught with danger. Okay, so I completely forgot I was going to do that. And now we can have a look at charts because I can get rid of the that. So let's have a look. We'll go back to daily chart. Now we'll have a look at let's go to the 1 minute chart. And let's have a look at WiseTech. And did we see a rally? Yeah, we have seen a really good rally. It actually opened down, WiseTech opened down 8.63% on open, and now it's up. So it's on about a 10% rally, and most of that rally happened just after open. So sometimes selling on open is not the best thing to do. By the way, WiseTech is at an interesting level. I think I've shown this before. If you have a look at the 200-week moving average, yeah, it's looked like it's bouncing off the 200-week moving average. And for those who would consider this a high-quality company, now could be the time of buying some shares in this company. This morning would have been a great time. You could have bought at $70. And what's the other one? Oh, Car Group. Let's see if Car Group has the same weekly. Yeah, oh, look at that. Perfect. It's bounced perfectly off the 200-week moving average this morning. Perfect bounce. In fact, on open, just like WiseTech, it was down 7.92%. Now it's up. So there's going to be a few companies like this who have bounced during trading today. And it looks like maybe they're bouncing off the 200-week moving average. Okay. So that's interesting. ASX is up. Why is ASX up? Unprecedented traffic. A lot of trading today. So we saw this during COVID-19. Definitely in bear markets, you see a lot more traffic. And that's probably one of the reasons why ASX is up. What I think anyway. What else? Challenger, AMP. Yep. So I do think some of these companies are just bouncing. The question is this the low? Is this the time to buy some of these companies? Personally, what I would do, this is just me, I would actually way more likely buy the high quality stuff. Ignore the low quality. Like Platinum Asset Management, low quality for me. The other thing is, I have a feeling gold companies have bounced as well. In fact, let's verify that. We saw on open Regis Resources was down a fair bit. Let's see if this has bounced. Oh yeah, look at that bounce. And what's the other one? Capricorn Metals. I'm wondering if this has bounced as well. Yep, well, not as much. Okay, so let's have a look at top losers. And it's going to be really hard to sort of filter out the reasoning why companies' share prices are down. Is it just because of the market, or did they release something negative? It's going to be really hard. For instance, First Wave Cloud Technology down 29.41%. I'm going to say that's just noise. The market's down, sentiment's down. Look at the turnover, fairly low turnover. And most of these companies are going to be fairly small. Yes, most of these companies are small until we get to the GGUS or GGUS, and so the long ETFs, the geared US ETF down 22.86%, and the ultra long NASDAQ down 22.44%. These could be instruments to get really excited when the market is near the bottom, if you can time that, because you want to gear yourself at that point. Maybe just wait for confirmation at the bottom. I don't know. Hard to trade those because they are geared. So if you miss the timing, you could lose a fair bit of money. I'm trying to think if I can remember any company here that did release something today, and I don't see anything. So let's have a look at top losers by market cap. And again, I think most of these would be down. Stealth Group's down 14.63%. This was one of my good performers during these bad times. They did release something positive last week, but still down today. So no company, well, I was going to say no company is what's the word? What's a good word? Vaccinated. No, that's not a good word. Yeah, no company is vaccinated against these sort of times. Maybe except really ultra defensive companies like Transurban. If I had to pick one company, it would like be Transurban, Telstra, or worse. If I had to buy, if someone said to me, you have to buy a company during a bear market, those would be the companies. Unless I could find a company that was rallying really hard on some really good economic news. Okay, so let's move on to the top 5 stocks of the day. Let's just have a look at the NASDAQ down to 4.39%. And let's just have a look at the ASX 20. Oh, and look at that. Look at that. A bit of selling coming in the last few minutes. The reason I really like Commsec is because it's up to date, unlike TradingView and Market Index. Okay, on to the top 5 stocks of the day. Excite Technology. There is a bit of a trading update theme here and an Appendix 4C theme. One company, and that company is Excite Technology. Used to be called Cypherpoint. I've been following this company as Cypherpoint and then Excite Technology for about 10 years, maybe 8 years. And they had no revenues or no receipts when I started following them. And they have quite a few receipts right now. So the reason why I wanted to show you this company is because they did release their Appendix 4C, one of the first Appendix 4Cs so far of the March or for the March quarter. And typically, if a company releases their Appendix 4C earlier than they usually do, so for instance, for the December quarter, they released it on the 31st. So if you open up the 31st or December quarter receipts or cash flow or Appendix 4C, the company was operating cash flow negative by 2.3 million. So they weren't that excited to get this particular Appendix 4C out there. So the very fact that they released this one on the 7th of April, we know what this is going to be. I sort of expected it or suspected. As soon as I saw this release, I went, this is going to be good. This is going to be good. I'd say they're probably operating cash flow and free cash flow positive. So let's have a look to see if I'm right. And let's not focus on the commentary first, but if you're very quick, you will notice that, yes, they do mention they are operating cash flow positive. There it is. Operating cash flow positive by 234,000. A possible inflection point. Just possible. I can't tell you what this company does. I'm pretty sure it's something to do with cybersecurity, maybe. And I'm pretty sure software, but cybersecurity, something like that. I wish they had an about section. Digital forensics and training. Cybersecurity, yeah. IT managed services, yeah. Okay, there you go. Anyway, so typically, I've gone through this very quickly. So typically, I like to look at operating cash flow. I like to look at cash receipts history. I'll show you the cash receipts history for this company. And I want to see operating cash flow first. I want to see how much spending they do with capital expenditure, but also whether or not they capitalize any sort of research or development. And you'll find that in investing activities, either in intellectual property. Sometimes they put it in other non-current assets. Nothing there at all. So a clean, sleek, clean machine here. So most of the money is in operating activities, spending and making. Anyway, so that's good. They could have put capitalized. No, they haven't. The other thing I like to look at is cash on hand. So their cash on hand was looking a little bit weak at 810,000 before the quarter. Now it's up to 1.1 million. And of course, they won't have to answer question 8, which is if they're burning through cash. Also, I want to see how much debt they have. So they do have a little bit of debt, but it's nothing too bad. $150,000 of debt, that's nothing. Anyway, and Section 8, they don't have to answer because they are actually cash flow positive. Okay, so interesting. And by the way, they also mentioned straight away in their commentary or their highlights, the first thing they mention is positive operating cash flow. So straight away, that is the most important thing. Operating cash flow positive. The company achieves breakthrough. I call that inflection point. Ooh, he's almost full. I don't care. Ignore. I would consider this an inflection point. They consider it a breakthrough. Now, I need to see some follow-up quarters. I need to see this continuing the next few quarters before I might get excited. But anyway, so this is an possible exciting quarter for the company. They also mention here positive results demonstrating successful execution of Excite's strategy as it rapidly shifts into consistent positive cash flow and EBITDA. That's exactly what I want to see. So this is telling me that the management and myself are on the same page. What I want to see, they're sort of focusing on, and that's exciting. Okay, so the other thing I want to show you is the cash receipts history for Excite. And here it is. This is the cash receipts history. And the reason I look at this, and it's running slow, The reason I look at this is I want to see cash receipts growing through time. Now, I believe this company would have made an acquisition or two in the past, so that has helped cash receipts, but we do see a bit of a trend through time. It's not a persistent trend or consistent trend, but we have definitely seen that. You can see between 2023 and 2024, receipts actually fell and they started rising again. So I'm not sure why that is, but we have seen that a few times now. Receipts go up, then fall away. So it's like a wave, just like a share price chart. But anyway, exciting quarter for Excite, but the share price is not up. And the share price is 1.1 cent. Anyway, so let's have a look at the chart for Excite. And not the weekly chart. No, this is the daily chart. And a chart doesn't look that bad. Share price has been as high as 1.9 cents recently. Now it's down to 1.1. This could be a nice little play here on the back of the company reaching an inflection point. Share price has dropped, so a nice buy the dip sort of situation. And I'm not the biggest fan of where the share price is. And the other thing I like to do is just have a look at the valuation, market cap, and shares on issue. Market cap is only 20.96 million. Ordinary shares 1.82 billion. Don't like that amount of shares, but market cap is not that high for a company that could have reached that inflection point. Okay, let's move on to company coming in number 4. And I have a feeling the rest of the other 4 companies won't be as long as this one. Oh no, I reckon this should be stock of the day. Yeah, let's put that as a stock of the day. Sorry, Nuix. What about Challenger? Oh, this could have been stock of the day, however. Share price up 6.868 because Dai-ichi Life acquires minority investment in Challenger. Doesn't sound exciting. And then you open it up and read it, and they bought shares at a premium. That's exciting. So they have agreed, Dai-ichi Life Holdings, that its Australian subsidiary has agreed to acquire 15.1% minority interest in Challenger from MS and AD Insurance Group at a price of 763 yen per share at approximately $8.46 per share. 53% premium to Challenger's closing share price on the 4th of April. So yeah, you can see they bought shares at a significantly higher price than where the share price is. That's why the share price is up. And in fact, if we didn't have a really bad day, I could imagine the share price of Challenger being up even more than this. So don't be surprised if we see a really good rally on the ASX over the next few days. If the share price of this company doesn't rally along with it, I probably should put in a bid for Challenger just based off that sort of possible rally. I should. Will I? Don't know. I don't think so. Anyway, let's have a look chart for Challenger. In fact, what I'll do is tomorrow, if I don't forget, is we'll have a look to see what happens with Challenger based off the very fact that if we do see a rally, I wouldn't be surprised to see Challenger share price just go through the roof. Sort of like a delayed reaction. So this is the daily chart for Challenger. And in fact, the price they bought at, so 8.46, if we have a look at the weekly chart for Challenger, it's not an exciting chart. The share price is well above the highs we have seen over the last 5 years. So we're talking about a 5-year high at the price they bought. So they must be excited about the future of this company. So again, maybe that's a good sign. Maybe that is a good sign for Challenger. Let's see if there's any buying in the closing auction. Let's have a look at futures. Oh, look, NASDAQ futures are going down 4.61%. So I would imagine we are down as well. Yep, look at that. It's all on the back of the futures. Amazing stuff. I really want to put in a bid for Challenger on the back of that. I could do it. Have a break, 29 minutes into the video. Have a break as I put in a bid for Challenger. Okay, I am back. Yes, I actually bought some Challenger shares on the back of what I think is possibly going to happen. I wouldn't say it's an absolute definite because if NASDAQ is down another 7-8% tonight, who knows? That would be a silly trade to make. But I do think if the market wasn't down a lot today, Challenger share price probably would be up 20 to 30%. And if we do see a really good rally over the next few days, I wouldn't be surprised to see Challenger share price go on a pretty good rally as well. So that was on a spur of the moment thought. And sometimes I do that. Anyway, so that's Challenger coming in number 4. Maybe it should be number 1. Okay, so next one we're going to look at is lifestyle communities, and up 1.7%. This is one of the trading updates that were released today, and I thought this was positive. I thought this was pretty good. And again, I think just like Challenger, if we didn't have a really bad day today, I think lifestyle communities might be up. So Q3 financial year 25 trading results, strategic priorities and pipeline. And this company has been under a little bit of pressure, I suppose. So if you have a look at their leads, appointments, gross sales and net sales over the last 4 quarters, had been dropping, and now we're starting to see it increase. So 3 quarters in a row of dropping and significant dropping, and now it's starting to see it rise. So maybe the worst is in for lifestyle communities, and you can have a look at this little graph here, something I might do, and talking about trading results. I'm pretty sure I did. I'm trying to remember I can't remember if they released or mentioned anything about what's happening now. Oh yeah, the operating environment remains challenging, while the results for the quarter highlight ongoing headwinds across the residential property market in Victoria. We had line of sight of this in our February market update and are progressing well with the execution of our stated strategy. So this, I think, was a good update from lifestyle communities. They just released it probably on the worst day to see any sort of upside. And by the way, lifestyle community share price is down a lot. And are we nearing a turnaround for this company? So that is what I'm looking at. So have a look at the daily chart. By the way, beautiful chart before about 2023, beautiful uptrend. And the share price has dropped a fair bit from the highs. We're talking about share price dropping 75% from the high. So if we do see a bit of a turnaround in this company, not really seeing in the chart just yet. It was looking hopeful in February, but the share price or the chart has turned a little bit negative. So have we reached the bottom yet? Don't know, but there is a chance. And I would say a lot of the downside we have seen recently has just been overall market, negative market. I'm just going to go back to CGF. Just having a look at the indicator price just to see what's happening. And by the way, XJO, a little bit of a rally, but yeah, a little bit of a rally just before closing. But we are down here, 4.19%. And of course, the most important thing is NASDAQ futures, or S&P futures and Dow futures. They're all going down. So I wouldn't be surprised to see if we do see a bit of downness in the American futures that the XJO will be sold off. I saw that once in the COVID-19 when the American futures had a bit of a bounce in the closing auction, and we saw a massive amount of buying coming in that 10-minute period. So I do think there are a lot of people out there, long investors, fundies, looking for some value, starting to look. It might be too early, but who knows? Oh, look at that. Go Challenger, indicator price up 1.18%. Hope that continues. Okay, let's go back to the stocks of the day and Nuix. This one, Nuix also released a trading update. This one sounded negative, and the share price and the market responded in the opening. Share price was down about 14%, and we have seen it recover. So obviously, it's not really saying that the trading update was not negative, but the chart looks horrible. But they just raised the very important word, uncertainty. And I wouldn't be surprised to see a lot of companies, if they do release trading updates, just mention uncertainty. We have seen this a lot over the last 4 years because of COVID-19. We remain a little bit uncertain about what's going to happen in the next half year, but I think this is going to be more pronounced moving forward, particularly if the Trump administration keeps on going down this tariff path. Anyway, so the company's pleased with the growth and quality of its sales pipeline despite the lengthening of the procurement cycle. However, recent increases in uncertainty and volatility in the geopolitical and global economic landscape, while creating opportunities, are impacting the predictability of deal closure timeframes. So the share price did fall away today, but it did rebound. In fact, we'll have a look at the 1-minute chart. By the way, the daily chart looks horrendous. Share price has dropped a lot since the highs. It's dropped 67%. But let's have a look at the 1-minute chart. I would expect a nice bounce. Not well. In fact, the bounce happened within the first minute. The low was in that first minute, and within that first minute, we started to see buying. So the bounce doesn't look as pronounced. In fact, for the most of the day, share prices are being sideways because there were so many people just looking at that opening and went, "Ooh, it's down 14%. I'm going to have to buy some shares." So a lot of volume came in that first 2 minutes of trading too. A huge volume came in that first 2 minutes. It looked like the bounce was coming to an end, and then we saw a secondary bounce at about 10.50 right before we saw the overall market bounce. Anyway, so that's Nuix coming in number 2. And coming in number 1, we have the stock of the day, Birddog Technology. Share price up 51.61% on a voluntary delisting announcement. Typically, if a company releases a voluntary delisting announcement, share price will plunge 51%. So what happened here? Well, the company have decided to do a share buyback at a significant premium to where the share price is. So they're putting their word saying this company is significantly undervalued at play. They're buying shares back at 5 cents. So if you're a shareholder of this company and you don't want to have your shares delisted, you can buy back at a premium. This is brilliant, absolutely brilliant from the management of this company. So all the other companies who say we're voluntary delisting because the market doesn't appreciate how you were so undervalued or the value of this company, and they see the share price drop 50% from there on in after that announcement, it's bollocks. This is beautiful. This is amazing. Birddog Technology Management, you have to give them everything for this. A great move from the company's management. So that's what it means by equal access share buyback. And yes, it's at a significant premium. So they do mention what I hate. The reason we're delisting is because company valuation. Trading price of the company shares has consistently reflected a valuation significantly below both the board's view of the company's intrinsic value and the valuations of comparable unlisted companies at a similar stage. I don't know if I believe that. Talking also about illiquidity, but usually when companies say that sort of thing, they don't do anything. That's it. Share price drops 50%. But the most important thing is equal access share buyback. Now, subject to shareholder approval, undertaking an off-market equal access share buyback of up to 100% of each existing shareholder's shares to provide existing shareholders with an opportunity to exit from an investment in the company prior to its delisting. Brilliant. Absolutely brilliant. Stock of the day material here. I'm not sure the company is stock of the day material, but management's decisions here definitely are. And the price. The proposed buyback consideration is 5 cents per share, representing a 61% premium, hence why the share price is up. I can almost guarantee you, if they didn't do this, equal access share buyback, share price of Birddog Technologies would have dropped 30%, 40% today. So absolutely brilliant move. And they've mentioned it's undervalued, and this is sort of a brilliant way to do it. This is a brilliant way to show, yes, we are undervalued. Other companies didn't do this. A brilliant move by Birddog Technologies management. By the way, the chart looks horrible. Birddog Technology chart looks horrendous. Well, we have to look at the daily chart. And yes, they listed back in 2021 at 75 cents. Now it's 4.47 cents. And the reason why is they're not profitable. So even though they consider themselves undervalued, I would be like, where are you? Are you really? Because let's have a look at the most recent Appendix 4C. Are you really undervalued? So now might have egg on my face if they were operating cash flow and free cash flow positive, but I'm pretty sure they're not. Yeah, they weren't. So cash receipts $3 million for 6 months, $8 million, and they're still burning through cash. And for me, yeah, I'm not a big fan of this. They might have potential, but they have to realize that potential. So I have no problems with the market selling down of this company's shares because they have to prove that they are good value. And I don't know how they do that unless they reach that inflection point. By the way, the valuation of Birddog Technologies after a 50% rise is only $7.59 million. There you go. Okay, so that's the stocks of the day. Let's have a look at one of your comments. So, Trader Hooper, Telix received or released an announcement today, which was not in the price-sensitive announcements because it was not price-sensitive. Telix Pharmaceuticals, Telix responds to recent US government actions. They're not affected. Because what they do, they produce most of that near site, which is in the United States. So I think they probably mentioned that. Yeah, due to the just-in-time nature of radiopharmaceutical products, such products are generally manufactured or radio-labeled in close proximity to the point of care. So yeah, they're not going to be affected. They also mentioned rare earth elements anyway, but I didn't read that bit. But the company also acknowledged reports of significant change at the FDA. Despite this, the agency continues to process applications information requests. Yes, that could be concerned because we have a nut job as the health person over there, and he's an absolute lunatic, but a Looney Tunes. But anyway, that's another story. So thank you for that, Trader Hooper. Always good to have these announcements to soothe the nerves, even if they do appear to be stating the obvious. So let's have a little chart for Telix, a company I do like, do own. Share price has pulled back a fair bit, and maybe this is a good time to buy some shares of Telix Pharmaceuticals. Nice little rally today, just like some other companies who have been sold off. And by the way, last thing I'm going to do is let's see what happened in the closing auction. Yep, we're just going through it. We can, a little bit of selling on closing auction, but not a lot. CGF, $6. I'm up already. Yay. I bought at $5.93, by the way. Open at 620, high at 640. So yeah, we'll see how well this plays out over the next few days. Anyway, so that's all I have. If you have any questions, any thoughts, leave those in the comment section of this video. I am not sure if I will do an ASX live open video tomorrow. Depends on how I feel. And depends what happens on Wall Street overnight as well. I don't think I'll do that every single day. However, I didn't mind doing it today. If you have any questions, leave it in the comment section of this video. Otherwise, I am not a financial advisor. If you need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.